This is Toyota, the #1 automaker in the world. Over the past year, their profits have declined 18%, despite having better margins due to higher car prices. And it's not like Toyota has grown sales in the last 5 years either. But in Q4, something happened that really cemented Toyota's fate. They lost almost $6 billion on a free cash flow basis. And this is their worst print since the great financial crisis. The last time they had a number close to that bad was during the COVID pandemic. But what does this even mean? Well, free cash flow just measures how much money entered their bank account after accounting for costs of maintaining or expanding their factories. So since Toyota has $45 billion in cash, it only takes a handful of quarters like this to get them in real financial trouble. Today I'm gonna go over Toyota's accelerating decline and why this is happening just now. So first, let's look at the biggest auto market in the world, China. China is a pretty good leading indicator to what's to come when EV market share increases. Right now, electric vehicles are 35% of sales and increasing very fast. And because of this, Honda and Nissan sales have plummeted in the last 2 years. And now it seems like it's Toyota's turn. Toyota's sales in China dropped last year for the first time in a decade. China's rapidly growing electric vehicle market is a threat to Japan's traditional car makers, such as Toyota, Honda, and Nissan. Their aggressive push to promote EVs has created a domestic market that is now larger than the rest of the world combined. China's government has implemented various policies to promote EVs, including subsidies, tax breaks, and incentives for automakers to produce EVs in the country. On the other hand, Japan has been slow to adopt EVs due to a lack of government support and focus on hybrid technology. Japan's traditional car makers risk being left behind in the global EV market as Big Daddy Tesla and Chinese EV makers such as NIO, BYD, and XPeng continue to expand and innovate. Chinese EV makers have access to a large domestic market, a lower cost of production, and a government support that gives them a competitive advantage over their Japanese counterparts. Japan's car makers face a grim future unless they can adapt quickly to a changing market and develop competitive EVs. Now, you would think that Toyota's executives know this, since it's very obvious to everybody else. Well, Toyota's new CEO prioritizes hydrogen and carbon neutral strategy. And bruh, you can't make this stuff up. Toyota's newly appointed CEO, Akio Toyoda, has expressed his commitment to hydrogen fuel technology as a key part of the company's future strategy. Despite the growing popularity of electric vehicles, Toyota believes that hydrogen technology has significant advantages over battery. Toyota Corporation has been a leading proponent of hydrogen fuel cell technology and has invested heavily in research and development of fuel cell vehicles. The company currently offers the Mirai fuel cell vehicle in select markets and plans to launch a second-generation model in the coming years. Toyota is also partnering with other companies to develop hydrogen fueling infrastructure and is working with governments to promote the use of fuel cell vehicles. While Akio Toyoda acknowledges the potential of electric vehicles, the company believes that hydrogen technology will play a complementary role in achieving a sustainable transport future. Toyota's commitment to hydrogen technology could put the company at odds with other automakers, including Daddy Tesla and Volkswagen. However, given the current market trends, it's important for Toyota to adopt and innovate quickly in order to remain competitive in the global marketplace. But will they innovate and adapt? Nope. Of course not. They've shown time and time again they're unwilling to do that. And this has culminated in the $6 billion of negative free cash flow that we talked about at the beginning of the video. Now let's compare that to the EV leader, Daddy Tesla. Incredible growth in every single metric imaginable. Revenue going perpendicular and net profits looking like a staircase that leads to heaven, all while increasing cash in the bank and decreasing debt. Tesla is a result of what happens when management focuses on the right strategy over a long period of time. Toyota, on the other hand, has 2 more years of runaway if they continue burning cash like they just did in Q4. Now, I want to show you guys something real quick. This is the Altman score, and this sort of predicts the chances of bankruptcy for a company, especially manufacturing, over the next 2 years. And look at this. For a company to be in high risk, it has to be between 0 and 1.8. Let's look at what Toyota has. Look at this shit. 1.24. That is like flashing red. So I think that Toyota has very high risk of just going under in the next 2 years. Now, if they keep burning like they just did in Q4, make that 18 months. But that's just my opinion. Now, if you enjoyed this video, you can check us out at VizualStocks.com. And thank you very much for watching, and I'll see you next time.